IRS can take your paycheck legally without a court order. One day, most of it's just gone. Let's talk about when that happens, how it works, and most importantly, how to stop it. I'm Brad Paladini, and I'm a tax attorney. I help people fix IRS problems before they get ugly, like wage garnishment ugly. So let's jump in. What is a wage garnishment? It's a letter sent by the IRS to your employer directing them to send a portion of your paycheck directly to the IRS instead of into your bank account. And this isn't just a one-time thing. It happens on every single paycheck until the debt is paid in full, including all of the penalties and all of the interest. When does the IRS do this? Here's the process. Step 1, you owe taxes and don't pay. Step 2, the IRS will send you a series of letters like a CP-14, a CP-501, a CP-503, CP-504. These are your warnings. Step 3, they issue a final notice of intent to levy. This is usually either a LT11 or a CP90. Could also be a letter 1058. Once you get that letter, you have 30 days to file an appeal. And if you don't, the IRS can legally start garnishing your wages. If you miss that 30-day window, it can garnish you pretty fast. So how much can they take? It's not a flat percentage like most other creditors. The IRS uses a formula based on how much money you're making, how many dependents that you have, in addition to your filing status. For some people, that can leave just a few $100 a paycheck. So how can you stop it? First, don't ignore the notices. It can get overwhelming with the amount of mail that the IRS sends you, and your eyes tend to blur over because they all look the same. But these letters are escalating in intensity, and once you get that LT11 or CP90 or letter 1058, you are under the gun to take action. Second, you can contact a tax professional to help you. You could qualify for something like a payment plan, an offer and compromise where you settle the debt for less. You could qualify for currently non-collectible status or a penalty abatement or a combination of all of these things. Third, even if they've started garnishing already, it's still not too late to act. You can get the levy released and negotiate some other arrangement with the IRS. But you do have to act fast. If your wages are already being garnished, don't wait for the IRS to finish. That could take years, and you need a strategy now. Here's a recap on wage garnishments. 1, the IRS must send a final notice of intent to levy prior to them garnishing your wages. Once you get that letter, you have 30 days to respond and file an appeal. Garnishment continues until the entire debt is paid, which could be years. You can stop or reverse it, but you should act quickly. Don't wait until your paycheck disappears. Get ahead of it. That's where we come in. You can schedule a free consultation or strategy session using the links below.